Welcome to the channel Path and Profit. We offer insights and strategies for consistent profitability in investing and day trading, helping you improve your trading skills and navigate the market effectively. Today's topic is transitioning from beginner to investor by 2025. I'll cover how to get started, including different investment types, long-term and short-term, and how to invest in the stock market through stocks and options. Researching this, I discovered that a $1,000 investment in Apple stock in 2007 would now be worth $248,976. That's an average annual return of over $20,000. Finally, if you're interested, I can also discuss Forex trading. Let's get started. I want to start off with long-term investing versus short-term investing. Long-term investing means that you plan on holding your positions, whatever it is that you're investing in, whether it's stocks, real estate, cryptocurrencies, you're planning on holding them for more than a year. Short term, you're looking at less than a year. So I want to dive into each one of these. When it comes to long-term investing, it really doesn't matter what stock you invest in. It matters on how long you can hold through the ups and downs. Obviously, you want to choose a stock that has a good foundation. You don't want to invest in something that's completely like gambling. You want to invest in something that's blue chip, something that's safe. Like when it comes to stocks, I like to look at the top 500 companies. Those are usually pretty safe. But with long-term investing, it really doesn't matter which stock you invest in because you're going to be holding it for so long. Yeah, it matters, but it's not as important as you think. For example, if you had invested in Microsoft, IBM, Amazon, Google, Apple, any of those top companies, you would have made a lot of money. The key with long-term investing is that you have to be able to handle seeing your investment lose money. Like with long-term investing, it's normal to see your investment go down in value. For example, if you bought Tesla at its peak and then it crashed all the way down, you would have lost money. But as long as you held through it and it bounced back up, you would have made money. So the key here is you need to make sure that you have the mental game for long-term investing. Like you need to be able to handle seeing your investments go down in value. Now let's take a look at short-term investing. Short-term investing is a lot more technical. With short-term investing, you're looking at the charts, you're trying to time your entries and exits, you're trying to find out where the next move is. You're trying to read the market, and it's a little bit more difficult because you're trying to time the market. With long-term investing, you just buy and you hold. You don't really worry about timing the market or anything like that. You're just buying and you're holding on for dear life. With short-term investing, you want to make sure that you have a strategy. You don't want to just be jumping in and out of the markets without a plan. You want to make sure that you have a strategy that you're following, whether it's supply and demand zones, fair value gaps, volume, whatever it is that you're looking at, you want to make sure that you have a strategy and that you're sticking to it. Also, when it comes to short-term investing, you want to make sure that you have a plan for when your stop loss is going to be hit and when you're going to take profit. Because with long-term investing, you really don't worry about that. Like you're not really thinking about when your stop loss is going to be hit. You're not really thinking about when you're going to take profit. You're just buying and you're holding on for dear life. But with short-term investing, you want to make sure that you have a plan for when your stop loss is going to be hit and when you're going to take profit. So now let me show you guys how to get started with investing. Investing in the stock market is pretty simple. All you have to do is open up a brokerage account and then deposit money into it. Once you have money in your account, you can start buying stocks. Most brokerages allow you to buy stocks with margin, so you can borrow money from your brokerage and use that to buy more stocks. This allows you to amplify your gains, but it also amplifies your losses, so you want to be careful with that. I recommend that beginners start off by buying shares of stock. This is the most basic form of investing. You're simply buying shares of ownership in a company. When you buy shares of stock, you're investing in the company's future growth. If the company does well, the stock price will go up and you'll make money. If the company doesn't do well, the stock price will go down and you'll lose money. When you're buying shares of stock, you want to make sure that you're doing your research and that you're buying into a company that you believe in. Don't just buy into a company because you think that the stock price will go up. You want to make sure that you're buying into a company that you believe in and that you think has a bright future ahead of it. Another way to invest in the stock market is by buying ETFs. An ETF is an exchange-traded fund. It's a type of investment that contains a bunch of different securities. So when you buy an ETF, you're actually buying shares of a fund. That fund invests in a variety of different stocks, bonds, commodities, or other types of investments. ETFs are a great way to diversify your portfolio without having to buy individual stocks. They're also very liquid, which means that you can easily buy and sell them throughout the day. Another way to invest in the stock market is by buying mutual funds. A mutual fund is similar to an ETF in that it's a type of investment that contains a bunch of different securities. However, unlike an ETF, a mutual fund is not traded on the stock market. You can only buy and sell mutual funds directly from the fund company. Mutual funds are typically more expensive than ETFs because they have higher fees. Despite that, mutual funds can still be a great option for investors. They're a good way to get exposure to a variety of different investments, and they're also very easy to buy and sell. Another way to invest in the stock market is by buying options. Options are a type of contract that gives you the right to buy or sell a stock at a certain price on or before a certain date. There are two types of options, calls and puts. A call option is a contract that gives you the right to buy a stock. A put option is a contract that gives you the right to sell a stock. Options can be very complex and they're not for everyone. However, they can be a great way to make money in the stock market. If you're interested in learning more about options, I recommend that you check out a course called Options Made Easy. This course will teach you everything you need to know about options so that you can start making money with them. The last way to invest in the stock market is by buying cryptocurrencies. Cryptocurrencies are digital or virtual currencies that are secured by cryptography. The most popular cryptocurrency is Bitcoin. Other popular cryptocurrencies include Ethereum, Cardano, and XRP. Cryptocurrencies are very volatile, which means that their prices can fluctuate wildly in a short period of time. Despite that, cryptocurrencies can be a great investment. If you're interested in learning more about cryptocurrencies, I recommend that you check out a course called Introduction to Cryptocurrencies. This course will teach you everything you need to know about cryptocurrencies so that you can start investing in them. Now, I want to touch base on Forex. Forex trading is a great way to make money in the financial markets. However, it can be difficult to get started. There are many different things that you need to learn before you can start trading Forex profitably. Fortunately, there are many resources available to help you get started with Forex trading. One of the best resources is a free online course called Forex for Beginners. This course will teach you everything you need to know about Forex trading so that you can start making money with it. Another great resource for Forex traders is a community of like-minded individuals. There are many different communities available online where you can connect with other Forex traders. This is a great way to get support and learn from other traders. Thanks for watching. I hope this video clarified the difference between long-term and short-term investing. Stay tuned for future videos if you're ready to invest. Thanks again for watching, and I'll see you in the next video.